Hello and welcome to Connect, the weekly podcast with the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you could join us today. Before I welcome today's guests, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support to our association, in large part so that we can continue to be that strong voice in Sacramento to represent the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors, and those companies include AmeriHome, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support in 2024. We greatly appreciate it. With that, I'd like to turn to today's guests. I have both managing principals from GreenRock joining me today, Chris Robbins and Joe Euphrat. Chris and Joe, welcome.
Thank you so much, Susan.
Thank you. Pleasure.
I always like to get started with a little personal background. So why don't you guys share how you got into the industry and commercial PACE industry in particular?
Yeah, so I'll start out, Joe. I started in commercial real estate back in 1989, 1990 with Isle of Thorn and Company. And through the years, had a stint on a mezzanine lending platform and have been in CPACE with Joe here. We started, what, 11 years ago?
Yeah. And then prior to my exposure in the world of CPACE, I was in healthcare investment banking and real estate, helping nonprofit hospitals and health systems in the capital markets. I'm on the board of a hospital here in the San Francisco Bay Area as well, and chair the finance committee on a volunteer basis, and got exposed to PACE financing through my wife's uncle, who was an advisor to a small PACE company. So that's how I became aware of the PACE world.
Always an interesting path to this business.
Exactly.
That's for sure. So I remember meeting you guys in your office in Sausalito so many years ago now, and I love a good entrepreneurial story. So why don't you give us a little background about starting GreenRock?
Yeah, so this was truly a garage startup. I believe it was like like a week before COVID hit, and the following 10 months was spent in my garage. I think we used our ping pong table as our conference table, but spent a lot of quality time together, 6 feet apart with the garage door open, but was able to start GreenRock, and here we are, in beginning of 2024.
It's the HP of PACE.
Yeah, exactly. Yeah, just how Bill Gates did it.
Absolutely.
One thing as I was looking at your firm's website, I noticed you have some charitable partners, which I thought was fantastic for a company that's really just kind of starting out. You both have long histories in this industry. So tell us a little bit about your charitable partners, City of Hope and Little Wishes.
Yeah, Joe, why don't you take a little bit?
So my wife, Laura, is a pediatric oncology and ICU nurse. She's been doing that for 30 years at a hospital in San Francisco, California Pacific Medical. And she had 20 years ago, she had a patient who just loved to have a little wish provided in the hospital. It just came to my wife's idea of giving a little wish to this child, Josh, who had cancer. And so fast forward over the last 20 years, the Little Wishes has now provided close to 26,000 Little Wishes in 33 hospitals across the United States, with a waiting list of 70 hospitals now, where kids get a little wish in the hospital every 14 days. The patients make the wish, and then the medical staff provides the little wish to the child. So it's bringing moments of joy to kids in the hospital.
Great organization. And City of Hope got involved in probably a decade ago. Good friend Drew Gordon, who some people might know, invited me to attend a City of Hope event. I think Ron Zeff was getting honored at the time.
That's right.
And City of Hope, 100-year-old leader in cancer research, treatment, and prevention, and along with a number of other peers in the market sit in and participate on the Northern California Real Estate and Construction Council. and we raise money for City of Hope, directed to cancer research and prevention.
Fantastic causes, you guys. Way to go. That is, you're setting a great example for your colleagues in the industry. Everybody should be giving back. Good for you.
Dan, thank you for asking the question, by the way.
So we're starting a new year. Any insights to kind of the overall commercial real estate finance market for 2024?
Well, hopefully it'll be better than 2023. And so let's start with that. You can only go up from there. But you know, as we sit here, we just went through planning, and of course, like others, you know, talked to a lot of different market participants, and feel that probably, you know, toward the end of 2024 should have some hopefully further stability in the commercial real estate capital markets. Probably current rates are here to stay for a while, but we hope as the Fed is kind of topped out and we start getting some easing over time that that'll change.
You know, you guys have been, as you'd said, in this commercial PACE industry for quite some time. How do you see C-PACE financing has changed in the past decade?
Yeah, it's really interesting, Susan. Up until the second half of last year, well, first of all, the kind of, you'd say in the first few years, just a lot of education, right? What is C-PACE financing? Never heard of it before, even though assessment financing has been around for over 100 years in most states. C-PACE was still new. And up until the second half of last year, you know, it was frankly competing in a world awash with a lot of cheap capital, practically some 0% money for some institutions. And so even though it was intriguing and C-PACE transactions were closing, in the big picture, a lot of users today had access to other alternatives. And from the second half of last year through this year, as we all know, through the Fed's actions and then the market's reactions to that, PACE financing has, there's just a lot of tremendous and significant more awareness, interest, and use. So it's really changed in terms of its general overall awareness. And coming with that, we've seen more capital coming into the space, which again isn't a surprise. Chris and I knew that that would be the case when you look at the attributes of PACE from a capital, you know, an investor side. It's low levered. It is a senior secure item in the capital stack, and it's financing sustainability metrics that are important. So the more capital is coming into the space.
Yeah, and sorry to interrupt you, Susan. one of the big areas, and this kind of goes back to capital markets, and I think in past conversations we've talked about all of these construction loans that are maturing or have matured and maybe are on extension, where it's kind of that cash in refi. And PACE is really playing a significant role more and more in providing a benefit to both lenders who have construction loans and the sponsors in terms of kind of recapitalization of these loans. And so we're seeing that kind of on a go forward basis be a big part of this marketplace. In addition to new construction and kind of filling a tranche up to, like, 65–70% with a senior construction and our C-PACE or C-PACE in general.
We've kind of answered what my next question, my follow-up question was going to be is kind of we've seen kind of how it's changed in the past decade. What do you see for C-PACE financing in the next year or two?
Yeah, I think following on what we just talked about, we're seeing an expansion. 41 states have now passed some form of C-PACE legislation, and there are probably 2 or 3 more that will be passing this year. Hawaii is coming online. We're seeing large markets in New York City and the boroughs coming online. And so kind of back to what Joe was talking about in the early years of PACE, there were only, maybe a half a dozen or a dozen geographic states that were PACE eligible or enabled. And now we're seeing that PACE is pretty ubiquitous in terms of its coverage on a national basis.
It's definitely it is interesting to see how just 10 years has changed, right? I think we probably had to.
Absolutely.
I think when I first met you guys, I was still kind of understanding what it was as well. And I know that most of my membership wasn't as familiar with the product. So it's interesting to see how things have changed in just really kind of a relatively short period of time.
Yeah.
Interested to hear, what are you guys seeing in the industry as from a conversion standpoint, like office to something else, or, you know, we're in these post-COVID years where I think there's some change brewing.
Yeah, continued dialogue on that topic, Susan, in terms of conversion, building specific, of course. You know, as it relates to the office to multifamily, for example, you know, when you drill down, it seems to be more the older office, the specific floor templates that can accommodate those types of conversions. Certain other types of real estate converted to, say, medical office or healthcare related as well, combination. And all that requires capital for upgrades, and PACE is in the middle of that, discussion, if you will, as to capital for those types of conversions.
Yeah, given what PACE can finance, which is quite a bit, you know, I would say that the majority of the work in the scope in a conversion project would be PACE eligible.
Right.
And maybe to put it in perspective, say here in California, if you look at a new construction project, typically north of 45 to 50% of all hard and soft costs would be PACE eligible. And I think that's one of the misconceptions that the markets had is, oh, PACE is used for a solar project, right, or for an energy upgrade. Well, it is actually used for, you know, a significant amount of the measures that go into either a new construction and definitely into a conversion project.
Interesting. You know, you, as I mentioned at the beginning of the podcast, you know, I met you guys several years ago now, and I'm very grateful for the support that you've given to the California MBA through GreenRock and through other companies along the way. Can you talk about why it's important for the commercial, you know, real estate finance industry to support the California MBA?
Yeah, no, it's been a great relationship that we've had with you, Susan, and the California MBA over the years, and especially with GreenRock now. And I think it really, you know, it's the unified voice. I think it's really important for all of us who work within the industry to know one another and to be able to understand and talk about the issues that are affecting our industry at any given time. I think there's great market intelligence that comes with being part of the California MBA. And of course, networking and the industry events. The Western States Craft is always our favorite, and well worth the time and the resources that we've spent and will continue to spend working with you.
Excellent. Thank you guys so much for your support over the years, and thank you for being on the Connect podcast. This has been great.
Great. Thank you so much,
Susan. Pleasure.
And thanks to all of you for joining us today on Connect. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcasts, and Spotify. That's it for this week, and we'll see you next time on Connect.